And this is something you can use on any market, really any situation. If the range from yesterday is this wide, and then we open up today, here's my high, there's my low, there's my range today, is there a difference there? You better believe it. Well, what we have to assume now is that the price action will try to explore this range. So we assume now it will go down, test the previous low of day, right? Come back up, go up, right? All the way up, test the previous highs, maybe come back down. The bottom line is we know that when we have a wide trading range the day before, there's a really good chance it's going to fill that range. So that was on our minds the first thing this morning, the narrow ranges, and we really didn't get the full move up, but we sure as heck tried. And what happened this morning, again, that was my first clue. First clue here on crude was that narrow range. Second clue here, what do we call this? A bear channel. I went in, I found my two lows. I then mark up my high above it, and there's your bear channel. Now, on top of that bear channel, we found our third clue today, and that was off our 13 range chart. Price went up, came back down, and gave us a bull channel. So we began our day on crude with a bear channel. We then finished our day on crude, well, didn't finish it, but we soon found a bull channel coming off those lows, right? The low of day from today. So first clue was that big wide open range inside day, right? Second clue, the bear channel. And then the third clue was that bull channel that we found, right, moving off that low of day. Now what happened today was, and we made a really good example out of this in our webinar today, 11:30. We answered all the questions today, 11:30. But what we saw today, though, was we had a range-bound market. Okay, this is a range-bound market. And we ended up having ranges all the way up here. All right, we kept getting these ranges all the way up. And we talked about the right way and the wrong way to trade a range-bound market. Now, we talked about how if we go up to the highs of that range, I'm looking to sell first, then I'll buy a pullback. Well, what happened this morning was we initially broke that range. I tried to buy a pullback. It failed. I then sold the highs. It failed. I then bought a pullback. It failed. Sold the highs. And then finally, when I did the fourth time, that one finally jumped. Range-bound markets meant we weren't getting a lot of these big explosive moves like we saw yesterday. It felt like people were waiting for something, right? I wonder what they were waiting for. So we knew this morning we were getting higher highs, and once we kept seeing the higher highs, again, like I said before, we quickly picked up on a on a bull channel, and the bull channel allowed us to sell the highs of the channel, right? Buy the lows of the channel, and we traded this channel, right, throughout the rest of the morning. Now, once we got above this price wedge, we were expecting that once we got above 95.45, we expected to have price really start jumping. In fact, we thought, for example, here with this potential wedge pattern here, right? That's a price wedge right there. We got above the 45, and boy, did we think this thing was going to go up, didn't we? We knew that it would break that bear channel, and we thought for sure we'd be going all the way up there to that 96, 94, almost 97, but never happened. We got up into the 96 area, and then it got all sloppy. And at that time of the morning, we were really, 10:45, 11 o'clock. We're getting closer to Obama speaking at 12, getting closer to that debt ceiling vote at 1 o'clock. And so we started seeing things really start to get a little bit choppy here. We picked up on the price failing, and then we sold the price as it came all the way back down, right? So we sold it coming back down. So we're buying pullbacks, buying the channel lows, selling the channel highs overhead. We get above 95.45 into that price wedge, and things start looking real sloppy. We pick up on the divergence, we pick up on the sloppy price action of the highs, and we get ready for a two-step short, couple big trades there, selling them back down. Over 230 ticks of profit once again. I know it's nothing compared to yesterday's 365 ticks of profit, but we'll definitely take it. So again, here we are now, 8:30 rolls around, we're chopping around at 8:30. We define our highs of the range, our lows of the range, and we break out, and we make new higher highs. when I make new higher highs. And again, remember, we didn't know about this bull channel yet. All we knew here was we're coming off the lows, right? We're rising back up and we had a sideways range. I'm aware I've got resistance overhead. I'm well aware of that. But we've got the open overhead as well. And the open is what? It's a great price magnet. So my thought process was we're going to break the highs. I'm going to buy a pullback and we'll go up to the open, right? Go all the way up to the highs. Makes perfect sense. I take my first trade of the day, 9 o'clock here, make 20 ticks. Wave long, buying a pullback. As you can see though, that didn't happen, did it? We went up, double top there, and we come right back down. Now, remember, I'm now going back into this range now. Okay, the range is still there. So I'm now failing at those highs, and I'm selling off now back into the range. 903, another 20 ticks. This can be that easy, right? I mean, 20 ticks going up, 20 ticks going down. Notice we're not getting any follow through though. So at this point in the morning, we're well aware now, take that money and run. You're not going to get that big follow through anymore. At 904, look what happens. The sellers now have failed, and now we're going to go right back up again. 21 range wave triggers now, and I take at 904 here, what was that? A plus 41 ticks. How did I miss that? Okay, 41 ticks. That's a plus 6, a plus 10, and a plus 19. 2 off at 6, 1 off at 10, 1 off at 19. So what a great example. The first 3 trades we take today, nothing more than range bound trading. We go up, we make a new higher high, I buy a pullback, 20 ticks. We then fail to make new highs. That failure says we're going right back down into the range, possibly testing the low of day again, right? No, not so fast. I make 20 ticks selling the highs, but it quickly then reverses back up again, and I said, all right, the first time was a 13. The second time the wave pattern hits, it's 21. Much higher percentage, and we make a plus 41 ticks on it. Remember, my favorite wave pattern is a 21 range wave, and you can see why. We're then going to, of course, as I said here, try to come back down one more time. Fails. We then jump. And what am I going to do now? Look at this. There's another range-bound market. See that again? So we began with the range. We make a new higher high here that ends up going nowhere, and we're now into another range. See that? So now there's another range. You could also say it's down here too, right? That could be your range as well. So another range, right? Triple top, double bottom. That's another sideways range. So again, how do I trade a sideways range? If we rise through the highs, I'm going to buy a pullback. If we fail at the highs, I'm going to sell those highs. What happens here next? We're going to break above these swing highs right here.